Today we are in Blockchain Zoom session 3 from Quantum Metal Corporate University and Blockchain Centre. So today we will be covering on digital banking, offering financial products and services in the virtual realm. We'll be looking into digital banking at a glance, digital financial products, and digital financial service. Most importantly, our esteemed speaker, Mr. Kenny Lee, all the way in Melbourne. He is a very respected lawyer, managing partner of Neo Legal Group, and he is very passionate about emerging technology and how this growing technology impact on the field of law. He is expert and has an in-depth knowledge on the capital market, fintech, corporate advisory, blockchain industry, and has advised over 30 projects and managers for a team of specialists especially in the blockchain law. So you know that he is the right person to talk about this today, as well as he is known to have an excellent problem-solving approach when it comes to all this. So I don't have to explain any more further, because the more I explain, I think a lot of us is like, oh my God, this person, he's amazing. And I can tell you what, he is definitely an amazing person, not to mention very good looking too. So in case all of you are wondering, I'm having a very good eye candy at this early in the morning. So that's good for me. Without further ado, let's welcome Kenny Lee. Kenny, over to you.
Hi, good morning. Okay, I think Hani has given a very good introduction of me. I don't think I'm that good looking, but I'll keep trying at my makeup skills. I'll share my screen and hopefully it won't be too bored for you all. I want to run this as an interactive session. So if you have any questions, please type them out. There's a bit of Q&A here and there. So give me your answers, give me your thoughts. Rather than me just imparting knowledge, I'm happy to hear from people as well. So let's get going. Can everyone see my screen?
Yes, we can, Kenny.
Yes, Hani, all good? Okay, so today we'll be talking about digital banking and the offering of financial products in the services or in virtual realm. When I started about this topic, I think it's too big to cover for 1 hour. So I'm just going to slowly guide it into what I think is quite relevant to us being retail users and how it may affect our future. So the speaking points today, I'll be covering digital banking at a glance, just where we are at with digital banking, digital financial products and services. So what are digital financial products and services and where are they right now and what does the future hold for us? I think that's also quite important. A bit about myself, I think Hani has covered a lot. Originally from Kuala Lumpur, I migrated here in 2008, but I do miss home. So I can't wait for the borders to open. I can balik rumah and makan nasi lemak and all that. But yes, for now, I am stuck in Melbourne. So I run a law firm. I'm also the chairman of Blockchain Centre Melbourne. So I was present a few weeks ago just talking about Blockchain Centre. So my passion really is around the implications of blockchain and how it's going to affect multiple industries. I've been in this for about 6 years now. And I would like to be in this for the next 30, 40 years. I think blockchain is here to stay. So I'll just talk about digital banking and what banking is. So what is digital banking? So just take a guess. Anyone can just type in the group chat and we'll go at it later. How long do you all think the concept of banking has been around? So do you think it's 100 years, 200 years, 400 years? So just type it out and we'll have a look at it later. But the concept of banking actually was even here before currencies were invented. So back in the day, historically, we can trace banking to be about 2000 BC. So 2000 BC is about, I would say about 4,000 years. right? Banks used to be temples, where large temples, they provide services and functions of a bank. And last time they used to trade using grains, using seeds, and then it became slowly into gold, where gold became the common denominator between different civilizations. But temples always used to be the quasi-bank. So temples were able to loan out monies. They help people to keep money safe when people are going out for travels around the world last time. And it became the financial centers of many, many cities, the Roman empires, and even before that. Hence why when you see and you read history, when there is a war, temples and their shrines always get attacked, because that's where all the wealth is stored. Moving forward, the Roman Empire, I guess they are really the kings of civilization, the experts of it, coined the modern term banking, where it then really developed into the medieval and early Renaissance period. Banks today, though, they look very different from what banks used to be last time, and there's a short video that can explain. But surprisingly, banks were driven by the need of global trade and foreign exchange, and gold was always the underlying asset for banks last time. But what is banking today like? So banking today is driven by advanced technology. So banks obviously have heavily invested in modernization of their services. So you have banking apps. You can do many products are accessible through the app. 20 years ago, if you want to know how much you have in your bank account, you have a small book. You get it printed. I still remember, right? When I get my Ang Pao money, I go to Maybank. I get a book. I get to see my balance. But these days, no one uses that bank book anymore. It's on the app. You can log in onto your website and you can see. It then leads to accessible, right? So because of technology, everyone then were able to access banking services that they weren't last time. I remember last time when I was really young, to go to the bank, my mom needs to bring me to the bank. We had to line up, take a number, wait half an hour just to deposit some money. This was back in the day. But nowadays, there is no such thing. In the ATM, you can just bank your money in. So because of that, because of leveraging of technology, the face of banking that we know last time, 20 years ago, has significantly changed to where we are right now. Compliance and governance also provide a security to us. So banks today are very highly regulated. They're controlled by the government. Each country has their own central bank, even in Malaysia, in China, in Australia. And every country has their own version of capital controls. So there is the advantages and disadvantages of capital controls, but ask someone that wants to send money overseas, capital control becomes a problem really, really fast. However, because of all those controls and regulation, banks they provide a lot of security and confidence to the user. That's why you're willing to put $1 million in the bank and you can sleep safely. So there is that advantage and disadvantage of where banking is today. So show a short video of the history of bank.
Bank, a term that has become an integral part of our lives. From saving money, booking online tickets, taking a loan, to any other money-related operations. Banks have become the bridge that connects us with money. But how did they come into existence all of a sudden? Let's turn over the pages of banking history. The first banking system was started in Italy. In the Middle Ages, Italians used to carry out their commercial trading and transactions sitting on a bench. In Italian, the word banco refers to a bench. With the intervention of many clients and customers, the word banco underwent changes and became bank. Technically, banking system was started right in the Paleolithic age with the advent of barter system. People exchanged and traded goods they already had for things they needed. It was beneficial up till the point when people felt that they required a common commercial tool for trading. As gold was commonly used by everyone, people started using gold coins as a trading tool, which led to the birth of banks. The inception of banks was mainly due to two kinds of people, the merchants and the goldsmiths. The traditional banking system was initiated through the concept of safe deposits. When the merchants traveled all over the world, they needed a place to safeguard their gold coins. Hence, they approached the goldsmiths to store these surplus gold in their safety vaults. This is how safe deposits came into existence. When the money was idle in the safety vault, the goldsmiths started lending it to people, earning an interest from it. He also gave a part of the profit to the merchants as an incentive, encouraging them to deposit more gold coins with him. This paved way for the savings bank or deposit scheme in the later stages and is still considered to be one of the safest investment plans. These can be rightly called the stepping stones to the conventional banking system. The world's first bank is the Bank of St. George in Italy, which was founded in 1407, whereas Monte dei Paschi is the oldest surviving bank since its inception in 1472. With technological advancement, the whole banking process is now confined to small mediums like computers and mobiles, which have made banking a simpler process. Just a click on your computer and you're into the money world in no time. Bank.
Okay. So that was a very short history of bank, but why I thought it was important is because the whole concept of bank actually started with the underlying asset of what we call today gold. And gold still holds true value today, while a lot of currencies today has, I guess, left the backing of gold. Originally, currencies had a peg of gold. And as you would know, quite a few years ago, currencies are now not pegged or backed by real gold. But gold still holds a true value. It is the reason where we are today with a lot of our financial existence in the whole ecosystem for financial services. But let's go back to what banking is today. Digital banking. So the word digital is obviously technology. So bank uses technology. Over the last, I would say 5 years, traditional banks have spent significant resources in developing and upskilling and innovating in what services they can provide. So I'm sure everyone now has a banking app on the phone. While it may provide 80% of the services, it's still not perfect, but there is still a banking app. And the app will normally allow you to apply for loans, credit cards, insurance, payments, transferring money, and it allows banks to customize the user experience to us. And last few years, and in Malaysia, one good example is Touch and Go, e-wallet and e-payment services. They are taking up quite a large lion's share of what banks used to do or services of banks. So you can see the market having a fragmentation of services where third-party providers are coming in. So for example, if you have money stored in your Touch and Go account, it's not money stored in your bank account, but to you, it's still an asset. So the exponential growth of payment providers, especially in the custodian of funds, is really taking up what banking or the core service of banking, which is deposit taking. So there is that fighting between the two parties on who gets more deposits. And then comes the new world bank, or what we call neobanks, often called the new age banks. They are normally very small. They provide better services, better rates through the internet. They possibly do not have a physical store, but they also have limited product offerings. So while they do provide better interest if you're saving, or lower interest if you're taking a loan, the downside to it is they do have limited offering as well. And obviously their size is smaller. Okay, what are the advantages then of banks going digital? So access, you have better access as what I've described just now. You have better rates and lower fees because of, streamline and efficiencies. And equity, so it allows people or the underbanked or unbanked community to then access banking services. So I do know, there is a large unbanked community in, say, Indonesia, in Africa, but everyone there has a mobile phone, and the mobile phone has internet. So I'm sure some of you would know the mobile phone becomes their bank account where they can then transfer their credit as how they use for methods of payment. So all those are the unbanked where, neobanks are able to reach them, and through technology, we are able to provide, banks are able to provide those services to them. However, there are some disadvantages of relying too much on digital banking. The downtime, if the server has an issue or there is a scheduled update, you may not be able to do any banking. There is a learning curve. My parents do struggle using online banking. They still like to go to the RHB bank manager and speak to the guy. So there is that learning curve, and there is security for those who are not very sure or a bit careless. You are exposed to hacking, When people share WhatsApp messages, SMS, we click a link thinking it's something interesting. It could be a virus. So there is obviously a security concern which traditional banks don't, because you just don't have a way to hack traditional banks if it's still in the bank book, for example. So digital banking and challenging the status quo. And how does blockchain play into this? So blockchain, obviously, the last few years has become increasingly popular. Many industries are using it, from transparency to KYC, provenance of product, logistics, traceability, whether the goods are real or fake. There is a lot of implication of blockchain and the industries it can affect. But one big thing, which is what we call version 4, it's blockchain impacting the financial services. So I think I would like to today's discussion is really talk about this. I think it's very good knowledge. So when someone says, have you heard of blockchain or buy this token, you know the right questions to ask. So how does blockchain help banking? Blockchain, and through its platforms, you can have platforms and marketplace, so you can think of it like different banks. There is no middleman. It gives you better liquidity because your access to people using blockchain is international. It's just not geographically limited. There is the opportunity for fractional ownership. It is also decentralized. There are cost savings because there's just less people in between, less middlemen, cheaper transaction, and remittance. And remittance is in direct relationship with capital control. So I'd like to draw your attention here to the right-hand side. If I'm going a bit too fast, I apologize because there's quite a lot to cover. On the right-hand side is the consulting firm Accenture. So they actually did a really good model on the investment banks and the blockchain impact. So anything blue, light blue that you can see, it's little to no impact. And as you can see, those are very mundane, or I would say non-replicable services like human resource, research, strategy, and delivery, where it requires face-to-face. But if you look at trading, just the center part and the middle bottom part is dark purple, which disruption of up to 70%. Okay, what that means is, if you look at it, trading, risk management, structured products, commodities, equities, fixed income, they are all impacted or can be impacted by blockchain. Okay, and Accenture believed through this short paper of theirs, which I can share after the meeting, the key takeaways is 70% potential cost saving on central financial reporting services. They also could save up to 50% across centralized operations, business operations, and compliance by just implementing blockchain. So it's a very powerful technology. More importantly, out of the 8 banks, over the implementation of blockchain, the cost savings can reach up to $8 billion US. These are just the cost savings of implementing blockchain. Now, the question is, Kenny, so how is this relevant to us? It might give us better interest rate, lower fees, but that is not the reason why we are here today. Blockchain became a twofold, or attacked 2 prongs of retail market. One is more efficient banking. Yes, so banks can save more money, right? But it may not directly translate to advantages for us. However, through the implementation of blockchain over the last 2 years, the term DeFi has really came about. So it's an emergence of decentralized apps. It's quite fractionalized now. It's quite fragmented, the industry. It allows us to access banking service without banks. So I'll dive into that a bit more shortly. So can anyone tell me, have you heard of DeFi, or you guys have been involved in the DeFi world as a user, as an investor? Have you heard of Uniswap, Compound? If yes, please in the chat just type 1. If no, that's okay, you don't have to. But I think DeFi has greatly impacted my life as well. So I'm quite a convert into DeFi, but there are definitely some points where you need to be very careful before you jump into DeFi. So please be educated. Please learn and understand and ask the right questions. So for those who don't know what DeFi is, I think there is a short video after this that I think provides a very good explanation as to what DeFi is, and then we can go from there.
DeFi. A lot of things. DeFi.
Sorry.
DeFi. A lot of things. The abbreviation DeFi stands for Decentralized Finances. That's an umbrella term which covers a wide range of applications working on blockchain. But what's connecting them? Their decentralized nature and financial purposes. They are also united by the idea of changing the world's rules about money moving from one person or bank account to another. Decentralized finances are about taking traditional financial products such as insurances, trading securities, lending, and borrowing into the crypto, leaving the middlemen out of the picture. Since DeFi products are so diverse, it might be easier to understand them one by one. So let's have a quick review of some projects considered as decentralized finances. Decentralized exchanges are a new type of cryptocurrency exchange which operate without any central authority. They allow users to make direct peer-to-peer transactions by executing orders through automated smart contracts. The clients at any point don't have to transfer custody of their funds to a third party, unlike in centralized exchanges. Most DEXs don't require users to go through Know Your Customer process, adding anonymity to other benefits of decentralized trade. If you'd like an example, take a look at Uniswap or Bancor. Lending platforms are offering crypto loans with lenders and borrowers interacting directly. One can get a loan in fiat money, giving crypto coins as collateral, or otherwise get a handful of cryptocurrency with fiat collateral. Another option is to borrow some crypto coins, providing other crypto coins as guarantee. Anyway, on a lending platform, a lender gets his interest, usually higher than anywhere else, and the borrower can get hold of desired currency without actually selling his crypto assets. Some of the most well-known platforms allowing lending and borrowing are Maker, Aave, and Compound. Stablecoins backed by other cryptocurrencies are also considered as DeFi. The lack of connection with traditional financial systems make them truly decentralized and universal. In their case, stability is achieved by over-collateralization. DeFi stablecoins such as DAI, SAI, or SUSD can be used as a safe asset or made to work in other DeFi applications. Prediction markets or betting platforms allow people to bet on the outcome of different events. The concept is not new. Centralized prediction markets exist already for a couple of decades. At the core of this idea is the wisdom of the crowd. If a lot of people bet on something, their bets will quite accurately predict the event's outcome. The more the better. DeFi has placed prediction markets on a whole new level, allowing people from all over the world to place their bets independently and anonymously. Want to place a bet on Bitcoin's price? Check Augur Platform or Gnosis Protocol. Insurance products have also found their niche in the world of decentralized finances. When it comes to money, no matter fiat or crypto, one wants to have some protection against hackers or price falls. Large crypto exchanges usually offer such insurances, but once again, they are centralized crypto. DeFi insurance protocols let anyone buy or provide coverage for smart contracts failure, exchange hacks, crypto loan collaterals drops, and a number of other unpleasant events. So far, this type of DeFi application is still emerging, but the perspective looks appealing. This list is not complete as the range of DeFi products becomes wider and wider every couple of months. Payment systems, no-loss lotteries, e-wallets, you name it. What do they have in common besides the idea of making financial products decentralized? First of all, they use smart contracts allowing secure transactions without intermediaries. Next, most of them are built on Ethereum blockchain. And last but not least, they are still immature, but on the rise right now. Where does such a hot interest in DeFi come from? DeFi products are booming and blooming since 2020. At the end of last year, the numbers were astonishing. Transaction volume of decentralized applications, about 95% of them are DeFi, went from 21 to $270 billion. The value locked in the DeFi ecosystem rose from $700 million to $2.5 billion. And 2021 has no signs of slowing down. Interested why? The pandemic had its effect on the crypto world too, although this time a positive one. Global interest rates have dropped low and investors have started to look for other markets. Add to this that crypto DeFi has quite low entry requirements and offers a high level of privacy. No wonder DeFi got a bunch of new clients. Another reason is that traditional financial institutions such as banks have shown great interest in DeFi. For a lot of investors, this is a good omen and sometimes an imperative to follow their steps. Are there any downsides? Yes, and quite a lot. Don't forget that we are talking about a new crypto sector which is very promising but still in its diapers. Users of DeFi applications may fear smart contract failures due to code laws, delayed and expensive transactions due to low blockchain scalability. Collateral may lose its value and hackers are keeping a close eye on theft possibilities. Plus, the world of DeFi may seem nice and easy with all those user-friendly applications, but let's face it, you've got to be a pro to profit. So don't shoot from the hip, do your own research and stay safe and rich. That's all for today's video. I hope you find it interesting and helpful. Let me know what you think about the
Thank you. So that was a good introduction to what DeFi is and how DeFi or different services of DeFi platforms can actually eat into what traditional banking or digital banking is providing right now. So let's talk a bit about what is DeFi. I know the video went quite fast, but DeFi is what I would say is the fourth wave of blockchain application. It's aimed to create traditional financial services products provided by the institution such as bank, but on a decentralized application layer. And why? It's permissionless. You do not need any central government to allow you to access. There is no requirement as to age, gender, wealth, whether you're rich or poor. As long as you have access to internet, you are able to then access the world of DeFi. It is also very transparent. A lot of good platforms out there, their codes are audited, they are open source. People have definitely made money. There are institutional people who has backed it. Players like SoftBank, Grayscale, they are heavily investing into the whole blockchain world as well. And because of this permissionless and transparent, there is that scalability as well. The video was a bit old. The video was last year. So just this morning I checked. It actually in the last 12 months has grew about 500% or 5 times. As of this morning, there is nearly $100 billion of USD worth of crypto locked in the whole DeFi or staked into DeFi. And this is what is just reported. And there are many platforms that are not part of this reporting. The growth of platform is exponential and they have covered many different services in the real world, and volume, it is actually matching 50%. Just the last quarter, there was about $1.5 trillion of transaction just because of DeFi. And that's about 50% of what Visa's payment volume is. So as you can see, just over the last 12 months, there's significant growth. I can't imagine what the next 12 months will provide us. So how does this affect us and the knowledge that we know as what digital financial products and services are? Okay, the time is going really fast here. Digital financial products and services as we know today. So banks provide 6 large areas of services and products. They provide investment, they provide payment, savings, they provide credit, they provide insurance, and they provide loan. Okay, so investment, you have your share banking app. You can then invest, in public mutual, in mutual funds, in shares through your banks, and nowadays through an app. There is payment. Obviously you use banks to make payment. So payment rails for fiat banking and transactions. Savings, a good place to store. Everyone calls it secure, but it's arguable due to how banks actually hold your cash. It's what we call the concept of fractionalized reserves. So often governments only guarantee to a certain amount. So how safe is your cash in bank? That is something you need to ask your bank. Credit, so they provide credit cards. They allow us to have overdraft for businesses and personal. They provide insurance services, and also they provide loans for us to buy our house, business loans for us to buy buildings. So this is what banking and banking products are providing us today. And I'm sure a lot of you would have access to all 6 of them. Okay, now let's talk about what is DeFi and what is the future. So it's a very short video, but this is a very well-recognized VC, and it's a video done by Forbes. So I thought it's quite worthwhile to share.
DeFi is a term for the next generation of digital financial services and products that is being built on and enabled by blockchain technology. So blockchain technology is the overall
Apologies.
DeFi is a term for the next generation of digital financial services and products that is being built on and enabled by blockchain technology. So blockchain technology is the overall innovation behind Bitcoin. And Bitcoin you could think of as the largest use case of blockchain technology today. Blockchains have gotten much more sophisticated, and they enable much more complex financial use cases and applications. These new use cases are called dApps, decentralized applications. When you think about DeFi, apps is greater than the parts, right? It's not just a collection of these dApps, it's an interconnected ecosystem. And the goal of DeFi is to create a new financial system that is fully digital native from the beginning. It's going to be faster. It's going to be interoperable. It's going to be more transparent. It's going to be global from day one. Anyone around the world can use these financial products and services, accessible to anyone with an internet connection. So a good way to imagine the long-term impact of DeFi is to think about it in comparison to the internet in the 80s and 90s when it was getting started. The people who used the internet in the very beginning, they were people who were diehard technologists, right? Because the internet was very difficult to use. There were all these chat rooms, there were bugs. Over time though, what you saw was the internet is that these early adopters, they seed it, they're the first users, they invest in these protocols with their dollars, and they attract VCs and investors like me who pour more investment money in, and we finance new technologies, we finance new, better user interfaces that make it more palatable for the average American, the average user. And eventually, it's just like the internet. There's going to be so many people online and the experience of the internet will become even better and better than non-internet experiences for certain use cases, right? Like for e-commerce versus retail, that the mainstream starts to adopt it. Everyone starts adopting it. You know, the front end of our financial system is beautiful and it's all on smartphones and it's all on apps and it's digital native. You go on Robinhood, you go on Schwab or E-Trade, but the back end is very clunky. The back end hasn't changed in decades or if not longer. It's basically just switch operators, you know, like running things over phone and very old technology systems. This, I think, is one of many things that DeFi will and blockchain technology will solve. You won't have to have your back-end provider call you on the phone if you're Robinhood and tell you that this is a problem. They'll know that it's a problem days or weeks in advance. And so even with us in America, we're seeing the problems and the little cracks that can be quite big with what happens when you have a fast digital native front end, but a very slow, creaky, not digital native back end.
So, as what he said, there is a number of DeFi platforms that can act as a product replacement for different services that what banks are providing or digital financial products, I would say. The names you see under DeFi product replacement are actually different platforms today that any of us can access. It is, please remember, DeFi is still in its early stage, and I'm not sponsored by any of this platform. And if you want to use it, you have to do your own research. But for investment, you have Kovacs Finance, you have Yearn. You know, for payments, you have Flexa, Tornado Cash. For savings, you have Aave, you have Compound. Credit, you have Cream Finance, you have Compound. Insurance, you got smaller platforms like Day by Day. The larger ones are Nexus Mutual. Loans are Fulcrum, Compound. As you can see, there are some cross usage between the platforms and platforms providing more and more service. So these are what I would call product replacement in the blockchain world. While it's still very fragmented at this stage and DeFi is still very early, it's about 2 years old when it really got popular. You know, platforms are starting to play different roles, not just savings or not just credit. They are looking at expanding. Through this growth, I do expect to see a consolidation happening very soon, where platforms, as they get bigger, they might buy up or people might move into something they trust more. So Compound is one of a very good platform, I would say. and they are now into savings. They can do credit, they do loans. So there are multiple smaller platforms. If you want, you can go to a website called DeFi Pulse. They provide very good information as to who has what, how much has been staked. So do your research before you deep dive into DeFi, please. That is very important, because I'll go to the perils of it in the next couple of slides. But as you can see, the traditional world of financial product, and once we layer on what we call the digital world, there is definitely a growth and change of the way we access and use these systems. So DeFi being an up and coming one, there are banks using blockchain as well. In fact, if you just talk about investment, the Singapore Stock Exchange recently quietly acquired a blockchain company because they are looking at doing tokenized assets and tokenized trading as well. So there are different players in the financial world, getting into the whole blockchain application and innovation. So it is here to stay, but please educate yourself as well. So how does it, again, dialing it back, how does it, or peeling it back, apply to us? Okay, so what is the future like, and what is the potential impact? I like to speak to this with my clients, or whenever I'm doing a discovery session. Imagine one day you can do a peer-to-peer home loan, and you want to buy a house. You don't go to a bank. You go to a platform, you key in the house address, you key in your details. You don't have to key in your name. You key in all the assets. And then other people can go, okay, I think this, you're offering 5% interest, backed against a home, I'll take part in it. So all of a sudden you can do P2P home loans, which you don't see in the market now. It also allows you to have fractionalized real estate or fractionalized real world assets, what we call the NFT, the non-fungible tokens. You can then access loans and get credit from the masses. If you need to liquidate, say 10% of your home, you can fractionalize it and then you can get credit on it. You can't do that today. You have to refinance your whole house against a bank, and you have to go through, your serviceability and all that. Also, access to multiple investment products available to anyone. So the same person that I was talking about in Indonesia, who is unbanked, now with his mobile phone is able to access and invest his money, his savings into different products around the world. They have the ability to then determine interest rate of your savings without the middleman. It's not a bank that determines your interest rate. You can say, this is what I want. I want 5% for my money. This is my risk profile. Any takers, right? And little to no capital control from governments. As you know, once you touch about, we're not talking about the central bank or the government cryptocurrency like digital yuan, talking about other types of crypto or other types of token. There's very little to no capital control, for the reason because it's decentralized. It is just very hard for any government to implement control. For a fact, the OECD is releasing a paper trying to legislate how crypto transactions work, together with the Common Reporting Standard and the FATCA. So they are all struggling because of the nature of how permissionless blockchain is. So blockchain, it is here to stay. And we hopefully like to see more regulations come through, even in Malaysia and in Australia, so it provides a bit of clarity. But the future is quite wide here. Though good future does come with certain risks, which we'll cover later. So changing of view, I hope to some of you, you learn a lot about DeFi today. I will leave some time for Q&A. But the obvious benefits of DeFi, there is no middleman. It is platform, it's decentralized. It means lower cost, you have more control. Because of decentralization, you have better security, things are transparent, and there is trust. It's trust on a trustless system. All that means confidence when you use the platform. The other exciting benefits, it's easier and it's faster for verifications in terms of lending and borrowing. If say today I have $1 million in ABC crypto, I can put it on a platform and I can get some money out of it, or I can lend it without any forms, without any information required. So it's a lot faster. The transactions and settlement is faster as well. You have access to broader financial services like what I was showing just now on the platform. on the, what do you call it, like compound and etc. Anyone can access that. So what that means, it directly means increased liquidity. And liquidity is a very important thing, and I think it's another 3 hours worth of conversation on liquidity and volume. But increased liquidity due to the access of larger target market and target audience. There is no single point of failure because everyone is a note holder. So it's not when the bank is not working or there is a bank holiday, everything doesn't work. There is no single point of failure. It's open 24 hours a day, 7 days a week, and you have more choices because the fact that it's online. So this is changing our view on DeFi and why DeFi is here to stay and how we will interact in the future with different financial products and services. It's not just for the banks anymore, it's for anyone really. So it's democratizing the access to capital and equities as well. So that I think is a very good benefit of DeFi. However, if you need to take a photo of a slide, not this, the last slide, this is important. Now, caveat emptor, buyer beware. While DeFi does provide a lot of future benefits and exciting things you could do with it, please be very careful if you were to say, Kenny, what platform do you recommend? I do not recommend any platform. Please do your own research. Reason being, DeFi is still trading in a very highly unregulated market, unlike banks and financial services where they are highly regulated, okay? So make sure any platform you do, they are regulated or at least have some government control, or they can show that they have proper governance as well, because there is nobody policing this sector being decentralized. Compliance and governance also may not be the forefront of DeFi platforms, unlike banks. As you know, banks have a compliance team. Not many DeFi has that. They may be 1 or 2 men, so in the interest of all stakeholders, I think compliance and governance is very important. The lack of protection as well. Many DeFi platforms aren't insured or aren't guaranteed by governments. So it may also stop the adoption of DeFi applications to a lot of consumers and financial institutions. So it's not like banks where, if you put in a bank, a large portion of it is actually guaranteed by the government as well. So being unregulated is something we need to be really careful. So when you look at any platform, look at where they are incorporated. Are they incorporated, say, in Malta? Are they incorporated in small islands, or are they locally governed as well? Scams, there has been a lot of scams. Recently, end of last year, there is a DeFi project called Sharktron. They ran away with about $10 million in users' funds. They closed the websites and they left users in the dark. So the 2 popular scams you can see is what we call the exit scam and the rug pulls. Exit scam it's in and out, and they heavily promote big marketing. Buy my token, buy my token, buy my token. They release the coins or release the token. Once they get a lot of buyers, once they raise all their money, they run away. So they just go missing. So that is what happened to Sharktron. Rug pull is a bit more long drawn. It's a bit more sophisticated. They promote, they release, the project runs, they do a bit of thing, they release news. So the investors or retail will think, they are real. They pump the token, you see overnight, it's up 100%, it's up 400%. Wow, I'm going to invest money. But what they're doing is they're playing the other side of the market and they're selling down as well. So they're actually robbing the value from the liquidity that the investors are providing. And it's a bit different from exit scam. Rug pull is a bit harder to catch because they are not running away. They're just trying to rob the liquidity and make some money. So some notable scams are LV Finance, Emerald Mine. They talk about $2.5 million US. YF Dex F Finance, they ran away with about 20 million USD. So definitely a lot of scams in this area as well. More importantly is security. DeFi being very young or at its infant stage, there is not a lot of experienced coder in the market, and hackers have been very active in this space. They like to find any exploits or any vulnerabilities. So just during the first half of 2021, hackers have stolen more than or nearly $500 million US due to hacking or security flaws. More recently, a couple of weeks ago, Poly Network, quite popular. They suffered a hacking incident where the hackers stole about $600 million of funds. It was the largest DeFi hack to date. Surprisingly, the hackers did refund and give back to Poly Network a large amount of that money. There is still some $300 million locked up, but they did return quite a large amount of the money. So the hackers said they were doing it to show the weakness of the code. So that is the cause, and that's why they return the money. But that doesn't mean just because they return it's a good network. Everyone's got to be careful. So if there is one slide you need to take a photo of this slide. Next time when someone brings to you a project or says, this is a next big thing, should I invest? Look at this, and this is something I call fact. Look into it, look into the project, and then ask the right questions. This is how you can avoid the dangers of DeFi, like what I said in the last slide. So what is this? Fundamentals, audit, code, the team, and the tokenomics. Those are the 5 things that you really need to look at before you make a decision. So we'll go through one by one. When asking questions about the fundamentals, the business underlying the project needs to make sense. You need to understand the business model. You need to be relatable. It needs to be scalable. You need to test their assertions yourself as well. For example, if they say, I sell lemonade and one lemonade I can sell for 100 ringgit, that is not true, right? So test those assertions by yourself. Ask them how they arrived to those reasonings. And also look at the returns. Are they promising unrealistic returns? Are they saying that you have 5x, 50x in 2 months? Are those returns actually realistic? I'm not saying that because they're unrealistic is fake, but it also provides you a weight in terms of whether this is a real or not real project. And also look at the investors. Who are the original people behind them? Have they left? Are they still in it? Are the founders still there? So those are the fundamentals of the business that you need to ask yourself when you're looking at a project. Also think about the audit. This is a very important part. Third-party verification. Poly Network, they got hacked. Look at if the smart contracts has been audited. Who are the party that did the audit? Are they a reputable audit firm? It's just like when you invest in an IPO, the financial statements has been audited by, say, KPMG and EY. Same thing here. There are auditors available for smart contracts. So make sure whatever project you're going to invest, the codes are audited and the report is available. Just because it's audited doesn't mean it's perfect. Audit does bring up flaws, and we need to make sure that developers fix those flaws. And also how often audits are done, because as you know, internet, right, it keeps growing. There is innovations every day. So audit needs to be quite often, which brings me to code, the C part, right? As you know, DeFi or blockchain is actually just what we call a smart contract based mainly on the Ethereum blockchain. So look at who are the developers. Is the code open source? If it's an open source, are those codes stable? Is it a safe code? Has it been hacked before? Is the smart contract public? Who are the developers? Are they reputable? Can you verify them? Are they reliable? And what is the underlying code being used and how much they have changed? And whether the changes that they have made are audited as well. So those are things you should be asking. And then look at the team. Who are the founders, right? Who are the people behind them? What are the experience in the business model of the project? They don't need to be experts in blockchain to launch a DeFi platform. I would prefer if a founder knows the business model more than technology, because it's the business model that keeps the business sustainable. What is the track record of the team? How accessible is the team to you? If you have a question to ask, do they stonewall you, or are they open that you can actually pose questions? They got nothing to hide. How transparent are they? Those are the questions we should be asking about the team. And last is tokenomics, okay? How is the tokenomics flow? How are the tokens distributed? Are there any vesting periods? So vesting period is periods where we call lockup, and lockup periods are good and bad as well. But normally they want to lock up the founders' tokens, so they won't dump and run away, exit scam or rug pull. Are the founders holding a lot of tokens? Because the amount of tokens in circulation directly affects liquidity and volume. So those are a couple of questions in totality everyone should be asking themselves before they invest in a project. So if you want to take a screenshot, this is a good base. Again, it's not bulletproof, but I think it's a good starting point. And I hope this is my last slide. Ask the right questions, keep asking those questions before you invest your money. So this is the future. I feel this is the future of digital financial products, and the experience that we are about to face in terms of how DeFi will affect us will definitely be felt in the next 5 to 10 years. So any questions? I think this is question time. I will stop sharing my screen and I can then see the chat. And thank you very much.